I think the S&P is probably going to trade up to 3,000. I hope it gets past my 3040 number. We're only about 4% away from it. If we do get past it, I do think we start to see some concerns build around the sort of the midterm elections, and I think you might see a little bit of a pullback, maybe 2875. I mean, that's just the number. I have no idea if 2875 is going to be the year-end close, but that's what I'm thinking. I think as we go into next year, there's going to be a little bit more concern about, maybe some changes in Congress, about maybe a slowdown in the earnings pace, maybe the Federal Reserve, less repatriated cash to come back from overseas and fuel buybacks. But I do think that the market sees a nice gain this year, maybe in the range of 7.5%, and probably tax on another, 5.25%, 5.5% for next year.
Jerry, what do you think? Bob is optimistic, with some cautions in the wind.
Yeah, I would put myself maybe even to the right of that. I'm outright bullish. The fact is, the president's talking about things that the market really hasn't focused on yet. I mean, we peaked out at this level back in January, and at that time, the market really wasn't discounting the earnings surge that we've had. We've gotten that. The market now trades at about 16 times, where it was at close to 18 times when it peaked out. So there's a whole 10+% move just to bring us back to fuller valuation, and I wouldn't even call that excessive. But the more exciting aspect is the fact that the rest of the global economy is poised to turn. China is really stepping up all of the incentives it's trying to put into its economy. Europe looks like it's had its stall out of Turkey and Greece and all those issues. And the consumption around the globe is now following all the liquidity that the central banks have provided these economies. And you're likely to see a continuing higher and higher expectation now for earnings kind of play out. And that doesn't hurt markets. That's what drives markets higher. And that's a surge that we probably still haven't seen the greatest part of. And you really want to be in front of that. And you don't want to be sitting here up at 30, 40 or even higher wondering if it's going to continue. You probably want to get in right now, and you want to get in before the holiday.
Okay, so Bob, speaking of the holiday, here you're going to have all these portfolio managers coming back after their long vacations. Time for fall cleaning. They're going to clean out the closet. What goes?
I think you have to be a little careful here right now. I mean, just like Mike said leading into this segment, we're up about 8% since June. So, I don't think you jump in with 2 hands and 2 feet. I think if you had new cash coming into the market, you sort of wait till people come back from vacation, see where the market wants to go. There are some concerns about trade still hanging out there. China, whether or not Canada comes on board. I think you stick with, the cyclicals, things like consumer discretionary, technology, healthcare. But then I think you might want to think about taking a little bit of profit off the table, just a little bit, if a position's gotten too large, and start to move into some more defensive areas. I hope Jerry's right. I really do. I hope I'm wrong. But I don't see the rest of the world being in the same type of situation that we are. We're in a great position for Trump to negotiate these trade tariffs. But I don't think the rest of the world is ready to handle interest rate increases. We have major countries that are still at 0% interest rate. What happens when those countries that are not doing so great start to raise rates? That's what concerns me. I hope Jerry's right and I'm wrong, but I don't think I am.